Okay, so welcome back, guys. So today we'll have a quick look on candles, different type of candles, and how are they formed. So these three topics or these few topics we'll be covering today. So now on the screen you are seeing a bunch of candles. Some are red, some are green, some are big, some are small, some are medium sized, and what else I can say? And some are forming a pattern. Some are in a close range. So these are a different type of candles which we can find in a particular instance or any particular instance. So now let's see about for this particular red candle. So what really happened over here in this particular red candle is, let me zoom in a little bit so that we get a clear picture. Yeah. So what really happened over here is it opened somewhere here, and then we have what do you say a terminology which is open, high, low, close. So this is one type of representation of stock data or the trading data, and whatever we are seeing on our charting tool is OHLC type of a data, that is open, high, low and close uh, are shown in one bar, which can be either a green color or a red color. So this is an important aspect because we are dealing in charts. So let's continue. So this candle over here, it opened somewhere here, and then what really happened is it tried to go up, seeing this opening pressure over here, and this much opening pressure was there. So seeing that this candle tried to go up, but it was unable to do it, so it created its high somewhere here, and then suddenly it fall below its expectations, and then it reached this particular level and marked its particular low, and then from there again buying pressure started, and it closed somewhere here at this particular location, and after that we can see this price kept on going up, and there is no stopping. But finally we are seeing a zone which is from where the selling pressure has increased, and the sellers are have become active, and we can see a huge red candle. So this is an overview of a candle, of what a candle is, and how to identify uh, red candle or a green candle just by seeing the color. And then we have looked at the aspect of open, high, low and close. So now we will see different type of candle. So in terms of structure, so first of all we have big candle, as you can see on the screen. Let me clear this out first. So yeah, so as we can see, big candle, this is a big candle, and then we can say let's find out a medium size candle. This candle over here is medium size candle in red color, and then we can see all these candles are small in size, this green candles also. So this is a big candle, sorry for the handwriting, guys, and this is medium size, and then this is small size. So we have three type of candles. One is big, which shows us that there is a huge buying pressure, and then we have a medium size candle, and then we have a small size candle, which shows the intensity or the amplitude of the selling pressure or the buying pressure in that particular region. So now let's see how a particular candle is being formed based on the trade. So let me clear this out first. So now let's see this particular green candle, it opened somewhere here, and let's say we'll not see at this particular price scale as of now. Let assume and arbitrary number. So let's say 100 rupees. It opened at 100 rupees over here, and then we have different levels. This is plus 10, then we have plus 20, then we have plus 30, and then one final level 40, plus 40. So now let's see what really happened in this particular candle. So price opened at 100 rupees, as you have seen over here, marked over here, and then it went up. So how will it go up? So now some people over here at 110 rupees mark, at this particular mark, they are ready to buy uh, x amount of this instrument, and uh, the same amount of what do you say, sellers are also present in that particular zone. So if x amount is being bought, then x amount is also sold. Same amount should be sold, and then only the price of 110 will be printed on the chart over here. Now what it shows is we have really high buyers at 140 rupees. So the price really like quickly went up to 140 rupees, and then it halted for this particular small period of time, that is 30 minutes in this particular range, and it bursted back up again in this particular zone. So what it shows is the buying pressure is really high in this particular zone, and sellers are not that much active. They are not interested in selling at this particular price. Might be it's really cheap for them for to sell at this particular level, or they might have cancelled their existing orders. They might have shifted their positions from selling to buying. Anything can happen in this particular instance. We don't know what really is happening, and but this is how a price moves. Now we'll take one example of a red candle. We'll take this particular candle. So how it went is, let's say it is at 110 level, so 110, and then it went up first, but there were sellers which was ready to sell it at a level of this particular level, that is 120 level. So from there it gave a sharp down move, and sellers were really active in this particular zone. So it gave a very really quick move towards the downside, and but we are seeing a zone over here below which the price is unable to go. So from there a really strong buying pressure came, and then what we have discussed earlier for this particular green candle, that kept on following. The buyers kept on buying at different levels, and sellers were not given a chance and they were just thrown out of this particular game. But after a while, after this particular green or the buying rally was reaching a particular level, let's say 200 mark over here, the buyers were thinking that this is a good enough price. I've bought at 100 rupees, now it's at 200 rupees, it's all almost 100 times return. So they started booking profit. So that's why a red candle is here, because a lot of selling is taking place, a lot of orders are being closed, people are booking their profits over here, and then a new buying has started again. People thought now again it will go back up, so they started buying again, and it started rising up again. So this is how a candle is being printed on the chart, and we have discussed quite a bit in this video about candles. So let's summarize what all we have discussed. So we know that we have a green candle and we have a red candle. They can be of three different size: big, medium, and small. And then we saw how price is being marked or being printed on the chart. And then we have seen Yeah, so we have seen these three particular things. We have also touched upon the concept or the term such as profit booking, which you have seen over here, and which we'll be discussing later on in this series in depth. But now we quickly see how these three particular candles, big, medium, and small candles, how are they important to us. So we'll quickly hop on to this topic before we close this session. So a big candle generally indicates that, or it shows us that it is an institution candle. Let's denote it by I. And all the other candles where which are smaller in size. Now these two are the small candles. So these are the candles formed by the retail traders who do not have the portfolio of, let's say, 100 crores or 200 crores or in thousands of crores. So these small candles are formed when a retailer is participating, and or else when two big institutions are participating and they are fighting in a very close narrow range. This can also happen like that. But generally all these small candles are where the retailers are trading. They are thinking that now this candle is a red candle, it will go down, down, down. But suddenly we are seeing that it has reversed and it has given up move. So all this kind of tricks and psychology we'll learn in the upcoming session. And also now we see a medium size candle. We have this medium size candle, and this can be formed by either by retailers or by institutions both. Sometimes seeing the trend, or let's say now this concept is widely used by retailers, so they know this is a big candle and from here a big move is expected. So then and what the retailers are doing is, as soon as this candle ends, they keep on buying, buying, buying. So sometimes the price go higher just by the retail's what do you say, involvement in this action, price action. But the institutions, they might be thinking in a different direction. They might be thinking of trapping you here and then going down, or they might be thinking something else, we don't know yet. So these kinds of tricks and psychological things is what separates retail trader from an institution level trader who is dealing with billions and billions of rupees. Whereas retailers, they hardly start with, what do you say, 1,000 rupees, 500 rupees, or hardly 50,000 or 1 lakh rupees. So this is a kind of thing that you should be knowing. And yeah, so that's it for today's video. And I hope you learned something from this. And if you did, then please make sure to subscribe this channel. And we'll meet again and with a new concept, and we'll see how we can make use of these particular big institution candles, and how to plan trades according to the charts or the patterns which we see on the what do you say, on the charting tool. Thank you so much.